What's up, guys? Jay Martin here. Now, my guest today is Will Rhind. Will is the founder and CEO of GraniteShares, an ETF business. Now, Will has his fingers in a variety of ETFs, including commodities-focused, real assets, income, broad U.S. equities, and as a consequence, he's got a great seat where he watches where mainstream investment dollars are headed. The reason I care about this is because any analyst, financial media pundit, politician, everybody's got their forecasts and predictions of the future, but the one sole truth that I can rely on most often is where is money going? Where money heads, things change. And so I like to check in with Will because he's got a great perspective on where dollars are flooding to now, where they're flooding from, where they're headed next. So in this interview, we jump into what he's seeing. I'm hearing a lot of bull signals when it comes to the precious metals market. And I hear this from newsletter writers, from the same pundits, etc. But to fact check this, I want to make sure there's money flooding that direction. And Will's got some great perspective on whether or not he's seeing that too. Just a hint, he is. All right, 3 things before you jump into this interview. Number 1, all the ad revenue generated from this channel is donated to an organization called Zero Ceiling. Super close to my heart. Their mission is to end youth homelessness. They do a great job. Check them out. Number 2, I publish a weekly newsletter. There's a pinned comment right beneath this video where you can subscribe. I write it every Friday. I love writing it. Love to have you join the team. And number 3, if you prefer to listen to my content as opposed to watch it, you can find me wherever you listen to your podcast. Just search for The Jay Martin Show. Here is Will Rhind. Enjoy.
This is Jay Martin.
What's up, guys? Jay Martin here, investor and CEO of Cambridge House. And I'm joined right now by Will Rhind, the founder and CEO of GraniteShares. Will, how are you?
Very well, thanks. Thanks for having me back on the show.
Yeah, thanks for coming back. How's New York?
Yeah, good, thanks. Yeah, not too bad. A bit warmer today, but yeah, still quite cold.
Got it. Yeah. So I've had a ton of people. Well, actually, why don't we start with this? It's been a while since I had you on. Just real quick, could you remind my audience if this is the first time they've heard from you? What is GraniteShares? How do you spend your time, Will?
Yeah, so we're a investment company or an asset manager, if you will. We specialize in ETFs or exchange traded funds. Broadly speaking, there's 3 things that we do: commodities, real assets, income, and then large cap US equities. So we're based here in New York. We do have a global business. Majority of the money that we manage is here in the United States, but presence in Europe as well.
Okay, now, for pretty diverse sectors, as you just discussed, could you break those down for me a little bit when it comes to real assets and income? I'm curious about those 2.
Yeah, so on the real asset side, we have what we like to kind of refer to as a core commodity offering. So we have gold, that's physical gold, which just tracks the spot price of gold and is backed by literally physical bars of gold sitting in a vault. We have the same thing, but with platinum. So another core metal for us. And then the third commodity strategy that we have is a broad commodity. Think of it like the S&P 500 or something, but for the commodity world. And that's just one fund that gives you exposure to the 23, largest or most traded commodities in the world.
Okay. Now, what indicators, Will, do you pay the most attention to in the macro environment?
Well, I think the main ones at the moment are, first and foremost, anything that the Federal Reserve is doing. That's kind of the most important, really, not just for today, but really has been since the financial crisis arguably, back in 2008. So really, Federal Reserve is massively important. Also, we pay a lot of attention to the inflation numbers. Particularly, that's become a huge issue of the day. But really, any other kind of macro data point, employment numbers, obviously GDP numbers, etc. But I think the 2 biggest ones at the moment would be anything the Fed does and anything on the inflation front.
Okay, now a key reason I wanted to talk to you today was, well, I'm suddenly seeing a pickup in Twitter sentiment, subscribers emailing me, newsletter writers, etc., suddenly turning their heads towards precious metals. And I say suddenly because, 2021 was a little bit sleepy in that sector. Yeah. And whenever what I try to do with this channel is like I interview as many people as possible. Everyone's got their own ideas, but typically there's also consensus, where suddenly there's alignment on maybe one or two things. I'm beginning to see that now in the gold and silver sector. Would you agree that's on the mark, or what do you think?
Yeah, I mean, I think first and foremost, whenever people start to lose money in the broader equity market or in the cryptocurrency market, obviously as now people tend to do, but we've had a situation where since the beginning of the year, people have lost money in bonds, have lost money in equities, and they've lost money in crypto. And so when you're faced with that sort of situation, that reality, people look for something that is a store of value or something that's going to hold its value or make money. And gold has really been that place. Commodities, I would say, as well, more broadly, done supremely well since the beginning of the year. So that's really, I think, focused a lot of attention back onto the space that, yeah, okay, cool. It's fine in a market environment last year where everything's ripping, risk assets are ripping, and everybody's loading up with equities and crypto, et cetera, is making a lot of money. But when it starts to go into reverse, that's really when people pay attention to something like gold or other assets that are not, equities and bonds like commodities.
Okay, that makes sense, because traditionally I would make a generalization that in a strong economy, base metals do well, right? And maybe in a stagnating economy, precious metals do well, right? But there's such a decoupling between the markets you mentioned, like crypto, the broad equities market, and any semblance of the real economy, that I've found it harder to differentiate those indicators a little bit. And so from your standpoint, where is money flowing right now?
Well, definitely it's into the commodity space and the precious metal space. So since the beginning of the year, I mean, clearly you're going to get people who are buying the dip, so to speak, and buying some of the badly affected technology companies or parts of the market that have been beaten up over the last few weeks. Right. But certainly from our business, from GraniteShares perspective, it's really been kind of one-way traffic, to be honest, into the commodities and the gold or precious metals products.
Okay, I was speaking with a metals dealer yesterday. He told me that inflows into physical gold right now were up 300% over his 10-year average, and on par with peak gold buying during COVID, right? Which would have been that spring crash in 2020, and there's a big sell-off, but then gold saw a big rush. That ring true for you? Are you seeing similar movement?
Yeah, I mean, I would say that the big thing for us is obviously since the peak in 2020, like you said, when gold went to an all-time high, it's been a kind of a lackluster market because the price has come down and it's stabilized. I mean, there's been nothing sort of terrible, that's happened in the gold market, but it's just taken a back seat, while all these other risk assets have rebounded or appreciated massively, particularly over the last year. Right. But I think, again, for gold to kind of hang in where it did in that sort of high, 1700, low 1800 level, and then obviously set the table for the beginning of this year where we had a massive sell-off in the market more broadly. And I think continued fears, I think that will be the theme of this year in terms of higher volatility and, people really trying to second guess what the Federal Reserve is going to do in terms of interest rate hikes, how many hikes and what that will do to the equity market and the bond market. So, definitely, I think from a positioning perspective, we've seen it on the commodity side, we've seen it on the gold side, and I think people, it's a prudent thing to do to have some ballast in the portfolio in case we get another sell-off or in case this is really just the start of a broader market decline. Right.
I got to ask, do you care to speculate on that, Will?
I don't think so. I still think that the economy, broadly speaking, is in good shape, despite the inflationary pressures, despite the obvious things that people will point to as potential signs of weaknesses. I think that the supply chain side of things looks like it's going to start to ease, or it is starting to ease, but will get better kind of second half of this year. So unless really inflation starts to skyrocket, from here, and in other words, as a bad inflationary surprise, or the Fed makes a policy error by maybe raising rates too much too quickly, I think broadly speaking that things are in good shape from an economic perspective. We can keep a lid on inflation, and we can normalize interest rates at a rate that the market can digest. I think it's going to be a decent year.
Okay, so you would make the assumption then that Jay Powell will follow through with probably 4 rate hikes this year?
I don't know. I mean, that's obviously what the market is speculating.
Yeah.
And that changes seemingly from week to week, or certainly when any other minutes are released. That people can be more hawkish about the number of rises, or more dovish about the number of rises. But I think the one thing we all know is that there will be rate rises, and just how the market deals with that is really the key question.
Yeah, I mean, a curiosity that I have will be, I suppose, like how would an asset like crypto, for example, perform? And I wouldn't say a high rate environment, but higher than zero. Let's say it's never been tested in that ecosystem before. Yeah,
it's a great question. And look, I think to some extent, maybe the question's already been answered, which is if it's anything like the beginning of the year, what we've seen is crypto more and more behaving like a risk asset and not some kind of alternative asset. In other words, something that's has a low correlation to equities and bonds. It seems to have a very high correlation with risk. And so crypto, sold off as a 50% peak to trough drop, since expectations of interest rate rises were kind of announced. And so I think if that's any indication, people might look to shift risk. Certainly if the equity market continues to be volatile, I think that will affect crypto, most likely affect crypto, as a risk asset.
Right. That makes sense to me. I mean, I've been watching this correction, I guess, wondering, are we getting back to maybe the real value, more accurate price point? Because, as you know, there's typically 3 stages of a rally. Investors move in, and then speculators move in, and then leverage speculators move in. And that's when things get really crazy, right? And that's what causes the capitulations. So thinking forward then, well, I'm looking at the next decade as I don't know where volatility will come from, but I'm expecting endless amounts of it, right? Until maybe like 2030, like I'm expecting just continual, dynamic, unpredictable events, to the point where like my wife and I, for example, we were debating moving this year. I'm up in Canada, right, in a town called Squamish near Vancouver. We hold 2 passports to the US as well. And we've debated moving down to like Arizona, Texas, Montana. We've done some shopping for homes. But what I told her, and this is on the back of just the way different governments manage risk, you could say, right?
Yeah.
And what I told her is that it's just way too early to call where might be a good place to relocate, because I think that the next 8 years are going to be as volatile as the previous 2, and things are going to come out of, left hooks from places we're not expecting. So, what do you think about that? How are you preparing your personal life, et cetera?
Yeah, I think in many ways, that's a kind of an interesting setup, because, one way to interpret what you just said is that, you can't make any long-term calls in this kind of environment, and that nothing is, you're not able to see with your crystal ball. So therefore you can't sort of set things in stone for now, for the next 10 years. And I think the lesson for that is to stay nimble and make sure that you do have some firepower, in your portfolio or whatever, to take advantage of mispricings or particular stocks or sectors that you like if you get the opportunity. But that, having gold, for example, in the portfolio, having other assets there is important, because we don't know what's going to happen. And in case that it gets a lot worse, and it might get worse, in the next 6 months, it might get worse, next year or even year after, who knows? But it's important to have that flexibility and be able to be agile.
Yeah, it's so tempting to think that we're just about at the end of this volatile period of life we've been experiencing, right? Like things are almost going to get back to normal. And then I think I don't know, if I dive in deep on anything, it's like not a chance, right? Like we're still drawing battle lines here. And, there's a federal election coming up in a couple of years in the US. Like, let's be honest, it's probably going to be explosive.
I think any kind of politics, I mean, it seems to be so polarized now, that regardless of who you're for and what your kind of beliefs are, that it just seems to be so polarized, regardless of whether you're kind of on the right or the left or in the middle. So I think one thing again we can guarantee is that come 2 years' time, there will be another as explosive as you say type election environment.
Yeah, because it's the environment is the fluid part, right? Like I read this tweet yesterday that just like hit home. It said, I can't even recall who tweeted it, but it said, I've been a centrist my whole life. In the last 9 months, I've moved from centrist to right wing to far right wing. Yet I haven't changed any of my opinions, right? It's the environment that shifted. And I was like, I don't know if I can say that about myself, but like 100%, right? Like I don't think I've really changed my perspectives or philosophies drastically. But where you might put me on that spectrum is not where I was a year ago, not even close.
Oh yeah, and I think things have gotten more extreme. Both sides, and there's no doubt that things seem to be. I don't know whether it's the social media environment or whatever that fuels this, but certainly much more extreme, I think, than it used to be. Yeah,
no matter where you look. Well, all right. Thanks for coming back on. It's good to catch up with you. Yeah, and get your
likewise. Good to see you, Jay. Thanks very much for having me on.
All right. Okay, guys, 3 last things. First, if you enjoy my interviews and would like a bit more, you can subscribe to my Friday newsletter. It's free, and the comment to subscribe is right beneath this video in that pinned comment. In this newsletter, I share my key lessons learned, takeaways, and any actions that I might be taking in the market as a consequence of what I've learned on the show. Second, when I started a YouTube channel, I never anticipated generating any advertising revenue, but coincidentally, I do now, which is awesome. And so what I've decided to do is donate this to an organization that is very close to my heart called Zero Ceiling. Their mission is to end youth homelessness. The way they do this is by providing young people experiencing homelessness with supportive housing, employment, professional support, life skills, and outdoor adventure. Because often young people in urban centers with no resources will never get the opportunity to experience wild places, nature that can be so transformational, and absolutely was for me. Third, if you prefer to listen to my content, you can now find us wherever you listen to podcasts. Just search for The Jay Martin Show.